Gordon Johnson was just on TV yesterday and he says Tesla stock will go down to $24.33 per share by the end of this year. So did his predictions before the earnings came true? Well, spoiler alert, no.
What are you expecting from this report, and what's the most important thing? Is it the results or is it the guidance?
That's a great question. So we think what's most important about this earnings report is the guidance.
I'm about to say something that is very difficult to actually believe. Gordon Johnson was right. Not intentionally though. This is a screenshot from yesterday. Can you believe just yesterday Tesla stock was $144? The guidance turned out to be the most important thing from the report and from the earnings call. As you can see, initially there was no reaction really to the earnings report in the after hours. And then Elon Musk mentioned, oh yeah, actually, in the earnings report, we are guiding for 1.8 million deliveries because it seems like there's a conflict between the country each year. There's a pandemic. There is some sort of tsunami, earthquake, something is happening, a factory shut down. So we are just giving up and we are just giving very conservative guidance this time. And so yesterday, I made this video, new Tesla stock catalyst to send it 10% higher in one single day. I was not expecting Tesla stock to go up 10% in a day so quickly. You can watch the video for full context. I wasn't really expecting for Wall Street to take that new guidance of 2 million, to which Elon clearly said he's not committed to that, but they are committed to 1.8 million yearly deliveries. I did not expect most people to actually go ahead and basically believe in that already. However, I don't think it is priced in fully yet. So I would expect the stock to go up more if Tesla actually exceeds 1.8-ish million deliveries for the year. Because looking at the earnings report, there was nothing great about it really, and there was nothing bad about it. So I think the stock in a large way also went up because everyone was expecting, or many people were expecting, to have some terribly bad news, and no bad news, so the stock just went up. And like with everything, there is more context to this, the markets did quite well today as well. But not well enough to justify Tesla stock going up almost 11% in one single day. And yes, I am still dollar cost averaging, I'm buying more Tesla stock. Although it has gotten more expensive now, it's up 48% year to date. Can you believe that? It hasn't even been a month yet.
What's most important about this earnings report is the guidance. Why? Why do we think that? So if you look at what we've phrased the midnight massacre price cuts that Tesla just engaged in, you're talking about from the fourth quarter of last year to this quarter. So far in the first quarter of 23, price cuts of 14% in the US, 12% in Europe, 5% in China. All of that happened in the first quarter. So while we expect, there to be some fireworks in the fourth quarter, what's most important is what they guide margins to in the first quarter.
Rob did an amazing job taking notes during the call, and Tesla said, specifically the CFO said that they will be above 20% gross margins, excluding regulatory credits. That is good. And also over 47,000 average selling price. But Tesla is focused mostly on operating margin. The gross margin does not really matter that much. What really matters is the bottom line, which is the operating margin. And the operating margin is increasing very nicely.
Keep in mind, we ran those price cuts through our model. We completely rejiggered our model last night. We believe they're going to report 70 cents per share in the first quarter of 2023. The street's at $1.02. And we believe for the full year 2023, they're going to report $2.99. The street's at $4.51. So we think what's most important is not what they've done in the past, but what they're going to do in the future and what they're going to guide to.
When we look at roughly the last 12 months, it appears that Tesla hit a new record for the highest number of shares traded in one single day. And unlike all these days here where Tesla stock just kept going down and down and down and down, this time the stock went up because the bulls are driving it up. Everyone wants a piece of Tesla stock now. So the market is saying we are not concerned about the recession or potentially bad earnings for the next 12 months. Probably the only way Gordon is going to be right is if there is a recession. But we could see earnings plummet even lower temporarily though. And of course, if that happens, you know what I'm going to be doing. I'm going to be buying.
All right, so go ahead and walk me through this. We're seeing price cuts from Tesla. At the same time, it seems like they're trying to increase their production capacity, not only for vehicles, but other parts of the business. Are investors going to receive that well?
Clearly, they did. So unless Gordon says they will, he's going to look like a clown. Full disclosure, I love clowns.
Yeah, that's a great point. So I just want to highlight, right? Tesla has done massive price cuts. And some of the pundits out there have said that's resulted in stronger demand, but the data doesn't support that. What do I mean by that?
Yeah, Gordon, what do you mean? I would like to know.
Look at their lead times. Their lead times in the US have actually fallen since the the January 12th price cut.
And we are starting our circus show. So this is the Model Y, the 5-seater version. Estimated delivery is February to March. The 7-seater version, the lead times, well, you have to wait for it longer now. Now, you can nitpick quite a bit and say that the Model S and X inventories, well, they are going up in the US. But literally, Tesla stopped selling them in Europe and China for quite a long time. And now in December, basically, exports started. And we now are seeing Model S's and X's in Europe again, and they are about to start and send them to China as well. So looking at Model S and X inventory levels, I'm not worried about that at all since the exports just started basically. And also look at this number, 815 vehicles in inventory. That is more than Model 3 and Y combined. In the US currently, you can see 780 currently. And Model S and X put together do not even account for 6% of total production. So while these two models were very important to Tesla years ago, having these two vehicles is not significant to Tesla's future anymore. Then we look at Model Y inventory and you can see there's an increase, right? Scary. However, when I sort all of these models by price, there is only one Model Y currently that is under $55,000. So only this one qualifies for the $7,500 EV tax credit. Speaking of a Model 3, Tesla is going to bring the refreshed version of it. We have been seeing these pictures all over, and Tesla also is not even selling the all-wheel drive version of a Model 3, which is the most popular version in the US. If Tesla had that version, I doubt that Model 3 inventory would have gone up as it did.
Same thing in Germany, lead times in China flat.
Tesla pushes back delivery times of Model Y in Germany. That was a week ago. And this one from 4 days ago, Tesla Model Y wait times increasing in Europe following price cuts. And the same thing happened in China as well. Tesla Model Y wait times increased to 2 to 5 weeks in China from 1 to 4 weeks before. Also, keep in mind that Q1 is usually not exactly a great quarter for automakers.
So I think that the demand is not responding to the price cuts, and I think that's going to scare investors. The question is Tesla going to be honest about their earnings guidance? Typically, Elon Musk puts out a very positive face, even if faced with dire circumstances. In Q2, when they shut down the Shanghai plant, we knew their growth wasn't going to be 50%. They still got it to 50% growth. They missed that number. So we think that they may be optimistic, but overall we think that they're facing big problems, and they're not seeing the demand response for the price cuts that I think many of the bulls hoped for.
Well, in terms of guidance, Gordon does not have a very bad point here. However, he conveniently misses the point that Tesla did not try to anticipate what the interest rates are going to be over the next 6 months when they gave that guidance earlier. The interest rates just kept going up and up and up. Rates are increasing faster than any other time in recent history. So, yeah, I don't think I will be that mad at Tesla for not being able to anticipate interest rates precisely. And let's not forget what happened in China at the end of the year with this right here. I mean, just read this. If I do, then I might be at risk for this video not doing as well as it should. So, and this is from the end of the year. One thing that I can think of that Tesla could have done that would have led to better results was cut prices sooner in China. Tesla had a sizable number of unsold Model 3 and Y vehicles in China. So that's the only thing fundamentally that I think Tesla could have done differently. But then how do you know that everyone is going to be sick at the end of the year? You can't really plan for these things.
Yeah, speaking of those demand issues, at the end of last year, we heard the stories about Tesla employees trying to rush to deliver vehicles and try to meet targets. In the end, Tesla ended up missing. Is that a big deal or a small deal? I mean, just in general, we saw consumer spending weakening as the year ended and tech companies having issues just in general. Is Tesla going to be judged harshly for this?
I think they are. That's a great point. So think about this, right? Their lead times have collapsed to basically nothing.
Whoa, whoa, whoa. Hold on here a little bit. Collapsed? That implies that Tesla did not do that purposely. Tesla did this intentionally. Tesla wants to be a mass vehicle automaker. Tesla does not want to be just a luxury automaker. So Tesla has done this purposefully. Also, Tesla was afraid of bad inflation. Inflation is now, well, seemingly it is under control so far. Hopefully it stays that way. So Tesla raised prices to absolutely absurd levels. And then, of course, orders stopped coming in because who wants to pay an absolutely absurd price for a vehicle, especially when interest rates are going up? And so Tesla cut prices now that the inflation has stabilized and the supply chain has stabilized.
Last quarter, their lead times literally went from multiple weeks/months to zero, right? Their lead times have collapsed despite the fact that their Shanghai plant, they cut capacity by 30% at the end of the fourth quarter. And their Texas and Berlin plants are running at just 20% utilization. They can't sell what they're producing right now, despite the fact that their plants are at full utilization. That's a big problem. So all these talks about them expanding capacity, we think they're really just fluff. And I think that, again, they're not showing the demand response to the price cuts that I think they hope for.
Even for Tesla, it takes time to ramp each factory. Now, Giga Shanghai ramped up very quickly. This is when we had the shutdown. And as you can see, it continued to produce more and more and more. Now, when you have a quarter where production falls, then we can talk. And since Gordon did not acknowledge interest rates going up, he is also not acknowledging that China had a very terrible period since early December. 8 in 10 people in China caught COVID since early December. So how do you want to not cut any production temporarily then when literally most of your workforce is sick?
I believe you have a price target for Tesla that implies about an 80% drop from where we are right now. Break down how much of that is fundamentals and how much of that is just the perception, at least, that Elon Musk is distracted and maybe he's just doing too much.
That's a great question. So the street's estimate on Tesla's EPS for this year has went from $6.50 to $4.51. The street estimate for last year, 2022, has went from just like roughly $5 to $4.50. So even the street believes that their EPS is coming down. I think it's purely fundamentals. We're seeing a collapse in demand for their product in China. We're seeing big inventory build in the U.S. I think that that's scaring the institutional investors, despite the fact you've had a lot of retail money flow in. So I think it's purely fundamental. And I think it gets worse as you have all this new competition entering. So we think things get worse through this year. That's why we think they're going to do $2.99 in earnings. The street's at 450. As the street adjusts to our number, we think the stock goes down further.
You're telling me that Tesla can hit a new high for the number of shares traded in one single day without institutional investors? You're silly, Gordon. And that's why I love watching him. I really enjoy watching him, by the way. And this is the buying opportunity of Tesla stock presented by Elon Musk. My name is Matt Postis. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.